sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm going to be deviating from the content I've been uploading recently. In this video I'm going to be focusing on just Ethereum and Cardano. I'm going to be updating and going back over my macro projections for these two coins, which fundamentally goes back to my Bitcoin phase cycle theory and the macro projections I have for it. If you are new to the content or haven't already seen, the first two cards linked at the beginning of this video will have me in depth going over that, which is the overall predication for why I have the ideas for what you see here, and then what I'll be going over Cardano. But to go ahead and get it started here, first and foremost, I just want to go ahead and quickly mention the high range, so approximately $13,000 to approximately $32,000 here in this text box. You can see if we do happen to, if Ethereum happens to hit $32,000 approximately, it would have a market valuation of approximately 3.8 trillion. According to my Bitcoin projections and ideas, it would only have a market value at the high range of the median of the high range that I'm projecting, approximately 225,000 of approximately 4.236 trillion market valuation. So nothing really bringing about a conundrum there, although a lot of people do think that Ethereum will eclipse and will eclipse at some point in the future the valuation of Bitcoin. Market-wise, I'm not personally one of those people. I don't, doubt it. I mean, it could happen. I just don't really think it will. I don't think it's most likely. And I definitely don't think it's something that is likely in the upcoming bull run. I mean, I wouldn't even say likely in the next 5 to 10 years, in my personal opinion. But here for the chart, you can see each of these right here, going back to this first bottom of December 18, November of 18, and then also of June, July of 2022. Each of these I have circled pink, printed RSI, pink vector candles lining up with these, as you can see back here, oversold territory, most maximally oversold territory, and then also back here as well. Each time we hit those, we then bounced out, we came back up into this yellow range, sat there for a little bit, and then eventually we did bust open towards the upside with parabolic price movement. And also the price harmonics are essentially identical. You can see we have this kind of 3-point pivot move to the downside. We make this double bottom with an M variation, and M connecting the two double bottom points, which those of you familiar with my content I go over this pretty often and reiterate it. It's just a form of double bottom you can see in the market quite a lot. And then we see the same thing with our current bear market, just on a shorter temporal time period. We see this kind of 3-point pivot ABCD like move. We have an M right here, and then we come up, we have kind of like a build up stage, and then we break out towards the upside. And then previously back here, this would be the build-up stage basically until we have that major breakout towards the upside. The high range sits within the 1.144 to the 1.618. A golden pocket range that I use goes back to Fibonacci, golden mathematics in general, which is why why that range would be an important one to begin with. For the other indicator, you can see the MACD flipped bullish January. This is the weekly chart, by the way, if you didn't notice already. January of this year, which lines up right when we can see up here, and we got this breakup into the 17-month approximate resistance. We broke about above it, which is a great thing to be seeing. We've been in a bear market basically going to the first high, May 2021, of the double top we set recently. 600-day bear market from there, and then from the second top it is a 420-day bear market. So definitely, in my personal opinion, I think enough time has elapsed to warrant an upcoming bull market, especially with the indicators and everything else pointing to that as well. Last thing is this fly-in based indicator. You can see here clearly these trend lines having two main touch points. You can see we deviated towards the low range below the 0 point, converged back towards the 0 point, snaked around it, consolidated around it for a little bit until we broke out towards the upside, and then clearly we're doing the same thing here. Deviated towards the low half of the 0 point, came back up to it, was entrenched under it just a little bit, then we broke this resistance line, and then came back above the 0 point. Now we're pretty much fully above it. We've come down and retested it once, and now it looks like we're coming down to test it at least approximately once more as well. But in terms, again, for the price, we could possibly deviate around to just approximately 1600. That does sit at the 200 estimating moving average. If we were to come back down to that area, likely probably seeing some wicks there. But if we start to lose that, again, losing 200 EMA, approximately $1,600. Likely we are going to retest the previous lows, or perhaps the bear market's not over and everything I'm going over in this video is wrong, because at the again, at the end of the day, I don't really know what I'm talking about. I mean, obviously I have an education and a understanding of market trading and analysis, but at the end of the day, I don't know, nor does anybody know what is going to happen, and these are just my predictions and are by no means financial advice. But outside of that, here for, oh, there's one other thing I wanted to point out just quickly, real quick. It's basically a very macro flag pattern that we're basically seeing here. You can clearly see, I'll draw that once more just to kind of maybe draw it a little bit better. You can see right there, if I were to draw this flagpole once more, you can see that from the breakout, or from at least right here, it goes as high as 40,000. If I were to put it right here, it goes as high as basically 60,000. If it hits those price targets, that would then mean Ethereum does eclipse the market value of Bitcoin. So again, I mean, I'm not throwing it out completely. It definitely could. I mean, it could happen. I don't personally think it will, but I mean, it by all means could. And if so, I mean, 40 to 60,000 was those even higher price targets that I did mention, just in case, you know, for whatever reason that does actually end up happening. So here for Cardano, again, I have a text box up here denoting the same market valuation that I had there for Ethereum, so you can just go ahead and read that for yourselves. This green fractal pattern that I have on here, you may be thinking, oh, that's just, why does he have another, we're already looking at Cardano, why have a fractal pattern of it? It's not, it's Ethereum. This green fractal pattern is Ethereum. You can clearly see they look essentially almost exactly identical. Obviously, you can clearly see we have the same W with this M variation. We come up to this top, we have this 3-point pivot move, this ABC right here. Then it's basically this most recent bear market, as up here was more clearly emphasized in its move. We had that ABC, then we had this more clear M, and we had our build-up stage right here, and then we blasted off. For Cardano, it was a lot less emphasized, especially with this M right here. You can not really see it as much. And then we had this breakout above the approximately 2-year resistance on here, just a long-term macro bear market resistance. Have our build-up point. Eventually, at some point, we will likely blast off towards the upside. The high range that I have for here is approximately $7 to approximately $37, maybe even looking up to $40 or so. Again, it's the same range here, 1.144, although this $40 range does push up to the 1.786, because that is just generally what, and these fractal patterns that I'm using, so these two white ones, are clearly obviously the way it behaved from March to our most recent double top in our high range. And again, the reason why I'm using these go back to my phase cycle theory for Bitcoin. So again, go back to those two cards at the very beginning of this video if you're new to the content, or you just want to, just in general, maybe refresh yourself on that or watch it, or why I'm using these specific white fractal patterns. I'm by no means saying it's going to precisely follow these, but I'm using these to clearly paint a picture, first and foremost, but also I do believe it'll follow relatively approximately to the general trajectory of these, again, these white fractal patterns that I am using. Right now, the main thing to look out here for Cardano towards the downside is basically approximately 32 cents. It lines up with the relative local low we set in March 6th of this year, and also just lines up with pretty much the very bottom of our estimated moving average band, so this massive purple band that you see right here. And then obviously, if we lose that, probably likely retesting the lows at around 25 cents approximately. And again, you can also see that we've got rejected right here, January 30th and April 10th at our median line. So basically 39 to about 42 cents, rejected twice recently. Indicators are essentially identical here again, as I've already shown clearly. The price harmonics are quite literally identical, which again, this goes back to Bitcoin as well. Bitcoin looks this way too. From the 2017 high, 2018 high, roughly approximately 20,000, to the bottom of 1819, leading into the March crash, into 64 to 69,000, down to the $15,500 bottom that Bitcoin has set recently. It's using the exact same price harmonics as basically the green fractal pattern as Cardano is. Obviously, it's going to look a little bit different, but overall, I mean, I make the assumption that some of you kind of perhaps have this image ingrained in your head too, that Bitcoin recently just made a W, leading into the March crash. And where my cursor is right now, we came up, had our double top, and then we've come down into basically the bear market that we're in now, making that M pattern. Now we're just breaking out towards the upside. But again, same thing here for the RSI. We got entrenched right here. I have circled right here at our recent bottom where we got pink RSI vector candles, which typically denote, especially on the higher time frames, can get a little iffy on the lower time frames, but on the higher time frames, like weekly and higher, typically line up, especially, I mean, if you're using the right inputs, we're going to line up with the absolute lows. You can see we've broken out. They're a little bit different from Ethereum. Ethereum was obviously right smack in the middle of our yellow range. Cardano just recently got rejected from the median of the yellow range, again around 57. So it'll be good to start to see, obviously, first and foremost, price is going to need to start to push back above basically 50 cents at this point, 50 to 60 cents, especially if we see strength above that. Also finding support, then bouncing above and higher towards 70, $80 cents towards a dollar is what we're going to want to see. But overall, I mean, again, everything is essentially the same here. We got a cross of the MACD leading into this pink RSI vector bubble right here. A little premature, but still overall lined up with the flipping of momentum of Cardano into this build-up period, which I believe is just a consolidative bullish build-up into a more parabolic run. If we take a look here at this volume-based indicator, again, once more, basically the exact same thing for Ethereum. From the highs, deviating down to the lows, converge upon the 0 point for a little bit. Again, same thing. Down to the bear market, deviating, then we're slowly converging back up towards 0 point, and eventually we'll have this spring of volume of volatility, bullish momentum towards the upside overall. And also, just again to point it out, from November of 2021 to our bottom at around December last year, January this year, you can see that there the support for this indicator down here was positive, whereas the price was negative. So I mean, this is very long-term bullish divergence that we're seeing. And we also essentially, I didn't really see it on the RSI, but anyways, that was basically all that I really wanted to go over in this video. Just as the outro of this video, I'm going to be doing this for all of the other altcoins I'm going over. I'll be updating, going back over the macro projections that I have, because the market's looking very promising right now. So far, this is about the 4th time that I've gone over these macro projections. There's been 3 other times within the last about year to year and a half or so that I've thought it was at least possible we were entering the next bull market, but now this time seems very, very solid, and I'm myself personally the most confident have been out of these overall 4 times I've felt this way, this being the 4th. Outside of that, again, this is not meant to be financial advice. I'm simply just uploading my ideas to the market, do your own research, and make your own financial decisions at the end of the day. Everything being said, everything gone over, hopefully enjoyed the content, hopefully able to learn something in an educational way, and I hope you all have a blessed day.
Ooh, I'm regretting now.